Only later in life, when I looked back at my school badge, did I realize how significant it was. Here they're talking about mind, what we're studying, body, the sports we play, and spirit. So I thought I'd actually dedicate this video to just pointing something out. I hope you're feeding your mind, body, and spirit with the right stuff. A little bit of exercise as well. Caleb's even got some carrots for you. Okay, in this lesson, I'm going to be looking at markup on cost price and markup on selling price, and how we're going to calculate the markup on the cost price and the markup on the selling price. We go into business to make a profit. So if we buy an item we're going to sell, you need to add a markup or a gross profit to the product that we are going to sell. So I'm going to have a look at markup on cost price and markup on selling price. And hopefully after this video, the calculations of markup on cost price and markup on selling price will be clear to you, because they can cause some difficulties. When I was at school, all this information was in my mind, but it definitely wasn't organized, and I didn't understand it too well. Everything was there, but what I needed to do was organize the information. So what I'm going to do is I'm going to take output VATs, input VATs, cost price, selling price, markup, and I'm going to take this slide and I'm going to put it into some order in your mind. Hopefully I'm going to clear up everything with regard to cost price, markup, and selling price. Okay, let's put all the pieces of the puzzle together. I've got here in front of me, remember we Calibu Education, that's our logo, and we're going to buy some stock from the computer store and we're going to sell it to a client of ours. So the transaction, for example, is Calibu Education purchases stock for resale. The amount including VAT is 230. So let's have a look at this scenario. First of all, what I'm going to do is I'm going to take off the VAT input. I'm going to calculate the VAT input to get the original historical cost price excluding VAT. And just a little bit of revision, if you've watched my previous VAT videos, the amount that we purchased the stock from the computer store was 230. That is the inclusive VAT amount. If I want to take off the VAT or calculate the VAT, I say times by 15/115. Remember, that's the VAT fraction and the rate is 15%. I'm calculating the VAT amount that is included in the 230, and that is equal to 30. So the amount of VAT that I can claim is 30, because the item that we purchase stock is a standard rated item. Now the other part, so 30 comprises VAT of the 230. So the remainder is 200. And I'm just going to show you another way to take off the VAT. I take the full amount and I divide by 1 plus the 15% VAT rate, which is 1.15. That is explained in my previous videos. And there, that gives me the cost price excluding VAT of 200. So the 230 that I paid for the stock has now been divided into the 30 input VAT, and I now have the cost price of the item I bought for resale, 200. And remember, very important, the cost price excludes VAT. Then what I'm going to do, remember we're going to business to make a profit, so we're going to add a markup or a gross profit. Markup or gross profit, same thing. So the cost is 200, and just in this example I'm going to add another 200, the markup. So cost price plus markup, and I've decided just to make this markup as an example, make it 200. And remember, this amount here excludes VAT. Cost price markup, when we do calculations, exclude VAT. And the cost price plus the markup is equal to the selling price, which excludes VAT. So 200 plus 200 is equal to 400. Then what happens is, before this item gets sold to the client, 15% of the selling price excluding VAT must get added, and that amount is 60. 400 times by 15% is 60, and that is the output VAT. So we took off input VAT, we added a markup, we got a selling price, and then we added 15% to the selling price, and we calculated the output VAT to be 60. So another way to get to the inclusive amount, if we took the selling price multiplied by 1 plus 15%, 1.15, is equal to the amount, the shelf price. That is going to be the price of the product sold to the consumer, including VAT. So I went right from the purchase of a product for resale from the supplier. I took the price and I calculated the input VAT. I got the cost price. I added a markup, got a selling price. Then we added output VAT to the selling price. And then that there was sold to, in our case here, the school. So it went right from purchasing from the supplier, Calibre Education purchased from the supplier. All this math took place, and eventually it was sold to the customer, the school. So in this example here, the output VAT was calculated to be 60. And if I take off the input VAT, which we calculated right in the beginning, it was 30. So what is owed to the revenue services? 30. Looking at this transaction in isolation, if we had to do a VAT return, we'd say output VAT less the input VAT is equal to 30. Now what we're going to do in a little bit more detail is the markup on cost price percentage. So in this little example here, what is the markup on cost price percentage of Calibre Education? So the markup in this example here, let me just rub this out a little bit, but the markup, the currency value or rand value, whatever currency you're working in, was 200. The markup was 200. What was the cost price? The cost price was also 200. And if you want to work out something as a percentage, you must multiply by 100. So the markup on cost price percentage is the markup of 200 divided by the cost price, remember, excluding VAT, multiplied by 100. And the markup on the cost price is therefore 100%. We can calculate the markup on the selling price. Remember, I'm using excluding VAT figures. So you saw the markup was 200, there it is, divided by the selling price, excluding VAT, multiplied by 100 is equal to 50%. So there are two ways to calculate your markup. You can have a markup on cost price or a markup on selling price. I'm going to do a number of calculations shortly, but this is just a little introduction to markup on cost price and markup on selling price. We at Calibre Education use two different ways to calculate the markup. And the first way is the markup. It's calculated on the cost price. This method is also known as the markup percentage method. The markup here is on the cost price. When we use the markup on the cost price, we let cost price equal 100%. When we use the markup on the cost price, we let the markup equal 100%. There's a second way to calculate the markup, and that is when the markup is calculated on the selling price. And this is also known as the gross margin method. When the markup is calculated on the selling price, we let selling price equal 100%. So if the markup is on the cost price, we let the cost price equal 100%. When the markup is on the selling price, we let the selling price equal 100%. That will make more sense when I do some calculations. I've taken the screenshot from the previous slides. I just want to point out again, when we are doing these calculations, we are using VAT exclusive amounts. The VAT has already been accounted for, taken off, right? We are using VAT exclusive amounts. Very important. So let's go and get on to some calculations. Earlier, I carelessly said, when using the markup on cost price method, I said let markup equal 100%, only once, but I did say it. When this method is being used, you let cost price equal 100%. Okay, I thought I'd just clear that up, because sometimes I'm thinking ahead and I think far ahead while I'm speaking. So I said markup equals 100% by mistake. When we use this method, cost price is equal to 100%. Okay, let's go and do some calculations. Time for some calculations. Let's have a look at this table that we're going to complete. We're looking at the markup on the cost price percentage. The markup on the cost price. And we're given percentages here. Remember, cost price plus the markup or gross profit is equal to the selling price. These three amounts exclude VAT. We're doing the markup on the cost price percentage. Calculations with regard to markup on cost price. Remember, when we do these calculations, the cost price, the markup, and the selling price exclude VAT. And I did mention, when we're using the markup on the cost price, we let cost price equal 100%. So let's look at number one. They say the markup on the cost price is 20%. So we're going to add a profit, a gross profit of 20% on the item that we bought for 200. Then we're going to sell it. So we're going to add a 20% profit on the cost price, and that is gross profit, or in other words, a markup. So how am I going to calculate the gross profit? It's quite easy. Cost price times by 20% is equal to 40. So then what will the selling price be? 200 plus 40 is equal to 240. So with a 20% markup on cost price, the selling price excluding VAT will be 240. There we go. They're the workings or the calculations for number one, when the markup on cost price was 20%. Now I've got 2A, number 2A. We're given the markup on the cost price is 30%. The cost price is 400. Now I've gone straight across to the selling price. The markup here is plus 30% on the cost price. And how I do that is I say cost price, excluding VAT, multiplied by 1 plus the 30%. And 1 plus 30% is equal to 1,3. So 400 multiplied by 1,3 is 520. And the gross profit, okay, I haven't calculated the gross profit there. It's very easy. 520 minus 400 is going to give you 120. Then I jumped on to the next one. Here, if I multiplied by 1,3 to go from the cost price to the selling price, if I want to go from the selling price to the cost price, I divide by 1,3. Do you see that? In 2A, I multiplied by 1,3 to go from the cost price to the selling price. If I want to go from the selling price to the cost price, I now do the opposite and I divide by 1,3. Let me just clean this up a bit. So if I want to work out for number 2b, what is the gross profit? All I need to do is I need to say 520 minus 400, and that will give me 120. And 2b, they are multiplied by 1,3 to go from 400 to 520. I added 30%, and like I said, if I want to go from the 520 to the 400, I divide by 1,3. So I went from selling price to cost price. First of all, I went from cost price to selling price. Then I went from selling price to cost price. Right, number 3a, the markup on the cost price is 40%. Here are the workings. We are given the gross profit, which is 300. Now I want to get back to the original cost price when the markup on the cost price is 40%. I want to get back to the original 100%. So I say 300 multiplied by 100 divided by 40. I want to go back to the 100%. And the figure that represents 100% is 750. If you say 300 times by 100, because I'm getting back to the 100%, remember, let cost price equal 100% when we're given the markup on the cost price. So 300 multiplied by 100 divided by 40, which was the markup percentage that was given to us, it is equal to 750. If I want to get the selling price, I just say cost price plus markup, so it's 750 plus 300 is equal to 1050. Now at 3b, we're given the gross profit or the markup. If I want to go to the selling price, I say the markup multiplied by 140%, because 100%, the cost price, plus 40% is equal to 140, because the markup on the cost price is 40%. Then I go and divide by the markup percentage, which is 40. So 300 times by 140 divided by 40 is equal to 1050. These two here are a little bit tougher, so you need to just go back in the video and watch that explanation again, over and over. It's when you're given the markup figure only, you're either going to move to the selling price or you're going to move to the cost price. If you move to the cost price, the numerator will be 100. You will say 300 multiplied by, I'm going back to 100% because the cost price is equal to 100%, divided by the markup on the cost price. If I'm going to the selling price, it's 100% plus 40% is 140. The numerator is 140, 100% plus 40%, and I'm dividing by the markup percentage. Right, I hope that makes sense, but you need to go over it again, and then eventually the penny will drop. Number 4. Remember, we're working with the markup on the cost price, and therefore we let cost price equal 100%. So we've got cost price plus gross profit or markup is equal to selling price. In number 4, we're given the gross profit 5,000 and we're given the selling price 10,000. So the cost price is easy to calculate. 10,000 minus 5,000 is equal to 5,000. Now also missing is the markup on the cost price, because we were given the markup and we were given the selling price. We just calculated the cost price. What we're missing is the percentage. And what we need to calculate, therefore, is just what it says. The markup on the cost price, and if we want a percentage, we multiply by 100. So markup divided by cost price multiplied by 100. Remember that line there? Markup on cost price means markup divided by cost price multiplied by 100. The markup is 5,000. There's the markup, 5,000, divided by the cost price, which is 5,000. So 5,000 divided by 5,000, anything divided by itself is equal to 1. So 5,000 divided by 5,000 times by 100 is equal to 100%. So the markup on the cost price is equal to 100%. So we were given the markup, we were given the selling price. We calculated the cost price. Then they asked us to calculate what is the markup percentage. And it's the markup divided by the cost price multiplied by 100 is equal to 100%. In 5a, we're given the markup on the cost price is 130%. So this could be a little bit tricky here. They're saying the markup is actually greater than 100%. The markup on the cost price is 130%. They are asking us to calculate the selling price. So what we need to do is we take the cost price, we multiply by 1 plus 130%. And 130%, 130 divided by 100, because a percentage is out of 100, and this is 130%. 130 divided by 100, if you punch it into your calculator, is equal to 1,3. So the cost price excluding VAT multiplied by 1 plus 1,3 is equal to 3,200. So there we go. There's the 3,200. So what we said here was 1,391.3 multiplied by 2,3 is equal to 3,200, because 1 plus 1,3 is equal to 2,3. Now if I want to work the other way, if in this case I multiply by 2,3, I now need to divide by 2,3. The selling price, excluding VAT, divide by 2,3 is equal to the cost price excluding VAT of 1391.30. These calculations, they take practice. If you want to be good at anything, you take this table and you practice. You practice working out the cost price. You practice working out the markup. You practice working out the selling price. If you're given VAT inclusive amounts, you first need to take off the VAT before you do these calculations, because what does it say there? Cost price, markup, and selling price, when we do these calculations, they exclude VAT. Remember, this is practice, practice, and more practice. In this table, I'm going to deal with the markup on the selling price. The markup on the selling price is also known as the gross margin or the gross profit percentage. When I'm dealing with the markup on the selling price, we let selling price equal 100%. Remember, we still have the formula cost price plus the markup is equal to the selling price. So I'm going to be dealing with the markup on the selling price. And in number 1, let's have a look. We're given the markup on the selling price is 30%. So if the markup on the selling price is 30%, and we've let the selling price here equal 100%, so we got cost price plus 30% is equal to 100%. That is the cost price plus the markup is equal to the selling price. So then what is the cost price? And I'm going to do a little bit of maths here. I leave cost price on the left hand side. I make cost price the subject of the formula. And if I do that, I say cost price is equal to 100, and what I do is I take the markup of 30% to the right hand side, and according to maths rules the sign will change and that becomes minus 30. If that didn't make sense to you, you need to catch up on your math rules, but that will equal 100 minus 30 is 70%. So in number 1, I'll work through it again now. Cost price is equal to 70%. In number 1, I didn't use actual numbers, I used percentages. So let's have a look. Remember, the markup is on the selling price. So when it's markup on selling price, we let selling price equal 100. In number 1, we're given the markup on the selling price, and the markup on the selling price is 30%. We've given the markup, it's 30%. We let selling price equal 100%. So then what is cost price? Like I just mentioned, 100 minus 30 is equal to 70%. The cost price, and if these were actual numbers, say for example the markup was 30 Rand, the cost price would be 70 Rand. But just to start off, I've used percentages. Number 2, we're given the markup on the selling price is 70%. We're given an actual number, 540. 540 is 100% of the number. So if the markup is 70% of the selling price, 70% of the selling price, 540, is equal to 378. And then if we got 100% minus 70%, cost price is 30%, and it's 30% of the selling price, and that is 162. This takes a little bit of practice. For me, this is easier than the markup on the cost price. Next one, the markup on the selling price is 50%. We're given the cost price. Remember, just while it crosses my mind, these three numbers here exclude VAT. So we're given the cost price of 300. What is the selling price? We say 300, the given cost price, multiplied by 100, because I want to get to the selling price. I want to get to the 100%, over the markup on the selling price. So cost price multiplied by 100 divided by 50, because I want to get to the 100%. Remember, selling price we let equal 100%, divide by the markup on the selling price, and that will give me 600. Then what is the markup in rands? It's quite easy. 600 minus 300, and 300 plus 300 is equal to 600. And there you can see the markup is 50% of selling price, half of selling price. I can do that mentally without using a calculator. Half of 600 is 300. So you can do a little bit of a check in your mind just to see if things look right, and if they don't look right, by estimating, you can check on your calculator. You will need to use your calculator anyway, and an easy, simple calculator. You don't need a scientific calculator for this. Any calculator should do the job for these calculations. Right, number 4. What we're given is, we're given the cost price, we're given the gross profit or markup, and we're given the selling price. 200 plus 300 is equal to 500. We need to work out the markup on the selling price percentage. Very easy. The markup is 300. The selling price is 500. Markup on selling price, and we want a percentage, so we multiply by 100. And the percent is 60%. So there you have it. There's a table on the markup on selling price. In these calculations, we let selling price equal 100%, and if you want a nice neat copy of this to have a look at, I will rub this all out. All the answers are in here. So now we've done the markup on the cost price, and we've done the markup on the selling price. So there are two ways to calculate gross profit. You can be given a table like this where you have to calculate different amounts. I'll show you how to do the calculations, and what I have here in this column are the answers, but I'm going to show you how to do the calculations. So in the first line, we're given the VAT inclusive cost price. The VAT inclusive cost price. So we've bought something from the supplier and it cost 8,625, and we're going to sell that item, so we can still take off input VAT. The second thing required is less input VAT on the above amount. So we need to calculate the input VAT. If an amount has input VAT in it, we can do it in two ways. I will show you by using the VAT fraction. So we say we take the inclusive cost price in line 1 of 8625. We multiply by 15 over 115, which is the VAT fraction. Remember, the VAT rate here I'm using is 15%. So the input VAT claimed on the VAT inclusive cost price is 1125. And there we go. That's how I got that amount. Then the next line, they're asking for the VAT exclusive cost price, the historical cost price of the item that was purchased. And that's quite easy. We say the inclusive amount less the VAT amount is going to give the VAT exclusive cost price. So there we go. The inclusive cost price in line 1 less the VAT just calculated in line 2 is going to give me the cost price excluding VAT. We are given in this example the markup percentage on cost price is 50%. So the markup on cost price is 50%. So what is the VAT exclusive selling price? The VAT exclusive selling price. Remember, cost price plus markup is equal to selling price. They're just saying what is the selling price excluding VAT. The markup here is 50% on the cost price. So what is the selling price? The cost price is 7,500. Remember, this calculation here is done with exclusive of VAT. It's done exclusive of VAT. So what is the selling price excluding VAT when the markup is 50% on the cost price? Easy. 7,500, the cost price, multiplied by 1 times by 50%. 7,500 multiplied by 1,5 is 11,250. 11,250 is the selling price excluding VAT. Let's clean this up. So let's see what's next that we need to calculate. What is the VAT on the selling price? The VAT on the selling price. The selling price, excluding VAT, is 11,250. If I want to add VAT, I can multiply by 15% and then add it, but I'm going to show you a quicker way. Not really. So I want the VAT on the selling price. I was thinking of going straight to the inclusive amount, but more about that in a moment. So if I want just the VAT, I multiply by 15%. The selling price, excluding VAT, multiplied by 15% is 1687 and 50 cents. Now the VAT inclusive selling price is simply the selling price plus the VAT, which is 11,250 plus the 1687 is 12,937. If I wanted to go straight from the selling price excluding VAT to this amount, the inclusive amount, I could have multiplied by 1,15. That's what I was thinking of doing earlier, but they wanted the VAT amount shown separately. Next, what is the gross profit earned? Selling price minus cost price is equal to the markup or the gross profit. Remember, these numbers here must exclude VAT. So I go and look at the numbers that have been calculated. I want the selling price excluding VAT, and I want the cost price excluding VAT. The gross profit is selling price excluding VAT minus cost price. 11,250 minus 7,500 will give me the gross profit or markup. Now, what is the gross margin percentage? Remember, we were given the markup on cost price percentage of 50% earlier on in the question, in the calculation. There you can see in the red, it says 50%. That was the markup on cost price. Remember, there are two ways to calculate the markup. It can be on cost price or it can be on selling price. And they gave us this 50%. Now they're saying, what is the markup on the selling price as a percentage? Markup on the selling price as a percentage. So I must multiply by 100. Remember what we've been doing in this video. When we do these calculations, these amounts here exclude VAT. So what was the markup? What was the selling price? The gross profit earned is the markup. So we've got 3,750 divided by the selling price of 11,250 multiplied by 100, and that gives you 33.33%. The 0.33 is recurring, so 0.33 goes on. I don't like to work with these thirds. They get a little bit confusing, but I've rounded that off to 2 decimals. 3,750, the markup excluding VAT, divided by the selling price excluding VAT, multiplied by 100 is 33.33%, 33.333 recurring. So there we got the markup on the selling price, and that was the equivalent markup on the cost price. So in this table here, there are plenty of different calculations. You need to work through it a few times for it to make lots of sense. So what I've done is I've planted the seeds, you're growing, and in the exam or test, something's going to happen to you. This is what's going to happen to you. You're going to flower and things are going to go well. But remember, my pal, you need to practice. You need to practice. You need to practice. Don't just look at this and go, I understand it. You take examples from your textbook and you keep practicing and you apply what you've learned. I'm just going to summarize with this example, but before I do that, I just want to go through this again as it's so important. Cost price plus the markup or gross profit is equal to selling price. These numbers that we use here to do calculations exclude VAT. So when we're given a cost price of 500, the markup is 1,000, and the selling price is 1,500, all exclusive of VAT. Calculate number 1, the markup percentage, which is the markup on the cost price, and 2, the gross margin, which is the markup on the selling price. So I'm comparing the two, the markup on percentage, which is markup on cost price, and the markup on selling price. So it's quite easy. Markup on cost price, if we take the markup of 1,000, markup on the cost price of 500, multiplied by 100. 1,000 over 500 times by 1,000. In the first example, the markup on the cost was 200%. Quite a big markup. Now the equivalent, quite interesting, markup on selling price. Yeah, we take the markup, once again, same numbers, 1,000, and we put it on the selling price of 1,500, multiplied by 100, and now the percentages are very different. 66.67. This one here, the second one is the markup on the selling price percentage, and this one here is the markup on the cost price. I've often thought when they say the markup is 50%, they never tell you if the markup is on the selling price or the markup on the cost price. There's quite a difference here, because the markup on the selling price, even though the amount of 1,000 is the same, the percentage is much smaller than the markup on the cost price. Because we're taking, in this case here, the second case, the markup over a bigger number, the selling price. The first one was the markup on the historical cost price. But these are two methods that businesses can use to calculate their markup. Can be on the cost price or the selling price. When I started this video, remember I spoke about my high school where we looked at mind, body and spirit. You need to feed your mind, body and spirit with the good stuff. And I thought I'd just add this. Our endurance will be rewarded. Keep going at whatever you're doing do it wholeheartedly. Be persistent. Your endurance and commitment will be rewarded. The end. Thanks for watching, everyone. We will see you in my next video.